Can we switch questions?
Did we switch questions? Is this not the question?
It is, but I made a list of QBank questions for when we do these office hours. And this was the issue that we had that I worked on
Okay.
with you the other day.
Okay.
Um,
So, but
oh, so while we have it up, I'll solve it.
okay, there you go.
I'll do
So
it.
I just was going to start by saying we are doing our office hour. This is a free office hour for people who have paid for either class or tutoring. And one of our participants, Christina, she was kind enough to even give me permission to share her tutoring session on this very topic. So it'll be on the channel at some point. But she's going to try and solve this. The first thing I was going to say, Christina, is this is a smart bear. And I always say, don't be a dumb bear. If you sell stock you don't own and that's all you do, you don't do any risk mitigation, you're in trouble. So I'll turn it over to you, Christina. You tell me how you went about solving this.
Okay, so I read this and it said that the investor sold short 100 shares. And then the investor also bought a call. So I would look at this and this would look like a hedging question to me.
That's right, because you have the
Um,
stock. You're absolutely right. When you have the stock, it is a hedging question.
and so with break even, we sold short 100 shares at 80, so that would be us bringing in I believe we'd be bringing in 80 because
That's
we're doing
correct. So let's just
5%.
get our tea. Let's get our tea. And you're correct. I got to change colors here. Do, 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 do. Fire up the tea, another mantra, fire up the tea. When I have a lot of people, Christina, who are just staring at option questions, they just stare and stare and stare. And I say, well, listen, that ain't going to do anything. And I say, why don't you fire up a tea and see if perhaps you can't kind of get going by tracking the money? So you're absolutely right. We brought 80 in. Whether you want to think of that as a plus or a credit or whatever it happens to be, that's 80 in. Okay, so what'd you do next?
And then the next part says we bought a call at 5, so that means that money went out
Right
5.
on. The protection, I think a great thing, you're right on the right track. Protection always costs money, right? So I told you right now, Christina, in my off-grid location, I'm naked. And that means I haven't bought any insurance yet on this, 40 acres and this cabin and this container. And I got contractors running around. One of the contractors' dog bit the other contractor, and the other contractor's up on the roof. And I'm thinking, oh my God, I got to get some insurance, because I'm thinking, the guy's gonna fall off the roof, the dog's gonna bite some kid. I'm like, oh my God, I can't go naked any longer. So protection costs money. It's like buying insurance. So you're correct. Your setup is correct. All right, what'd you do next?
And then next, what is the customer's max gain? So the max gain, because we sold short, the shares are always the dominant part of
That is
whatever.
exactly right. So what you want to have happen, you're correct. When you're trying to figure out good news or bad news, the way to attack that is say, yeah, the stock dominates. And so this is a bearish position. And that means I want the stock to go down.
So that means that the max gain would be 7,500.
Right
Um,
on. We do it point per share, but you're correct. The best case is the stock goes zero, right? If we're a bear, we want the stock to go to zero. You are correct. So we can make 75 points or $7,500. So that means the choice is either A or B. So you are correct that it's 7,500. So now you got to decide between A and B. So what'd you do next?
we I would just say that it's A. We didn't
A,
calculate
max
max
loss
loss.
is 500. Let's see. It looks like you're correct again because anytime we want, being the smart bear we are, we can buy back the borrowed stock at 80. And so that is indeed our worst case is $500. And then again, your point, you're correct. It's a break even is the number that would make the columns balance, right? So 75 is indeed the break even, right? Because now you got to cover your recover your out of pocket cost for the insurance. So if you just sold the stock short, then it would be 80, but now it's 75. Excellent, excellent, excellent. And then let's see. Now, I told you this is the challenge. Oh my God. Look at that rationale. So, um,
Big, thick paragraph.
yeah, and you can't feel too bad when you miss a question. They got to spend a whole paragraph telling you what you missed. Okay, so that was that one. Hold on just a sec. Okay, you said you had a laundry list, huh? So what's our next one?
I sent the next one in the chat. It's 1564203.
203. Okay. An investor with no other positions. Okay, let me look at this one. Hold on. I'm just gonna I like to get rid of that. So probably people have already looked over at that, but let's pretend they didn't. So an investor with no other positions sells 4 DWQ June 40 calls at 4. First thing I think of is what a dumb bear. We said don't be naked. Here you're agreeing to sell 400 shares at 45 that you don't own. I don't know if it's helpful, but I always think of when people sell options, they're a potential victim, right? And always going to be a potential victim against the 4 points. The calls are exercised. So they're telling you, you did indeed deliver 400 shares at 45 when the stock is trading at 47.25. What is the investor's profit or loss? So did you get this one right?
No, I got it wrong. I knew that it was a loss because if you're selling naked calls, and
There's a couple ways to proceed. So one way you could have proceeded is you could have said, well, I'm not sure you were right about a loss. I haven't actually answered the question yet. But one way you could have done is you could memorize the break even strike price plus premium 49, right? And you're a bear and you want it below 49. And 47.75 is indeed below that. So I think it's going to be profitable here if you just want to memorize break evens. Another way we could think about it if we're a visual person is options are about floors and ceilings. And here is the stock price. There's 45, our strike. And boom, let me just make that a little smaller. We'll put that in black. And it's all about the market price. There is no ceiling, right? So you got a little bit of a problem here. You brought in 4.25. So there's our break even of 49. Strike price plus premium. And then, as I said, we are bearish. So that means we want to be below that, right? We certainly don't want it to be above that, because if it's above that, we're going to have some problems. There's no graphing on the test. No graphing on the test. I'm just showing what that would look like. Oh, come on, Dean. There we go. Let's put that in red. And so there, we're not going to be happy. Here we are going to be happy. Okay, and now let's put in our stock price. Our stock price is 47.25. And let's now do our T. So I suggest we do things on a per share basis. So I'm not going to put $1,600 in there because I just think that's a mental mess. Right. So again, it's a buffet. You take what you like, you leave what you want, don't. Now, Christina, this isn't a hedge from our tutoring session.
Right.
This is just a speculator. This is somebody, making a bet on the stock price. So it says I got exercise. So one of the most important things I think, what Dean thinks isn't testable, but is contract specifications. In other words, what I would hope is that you're not struggling when you look at this and say, okay, what is this? This is an obligation to sell 400 shares at 45. That's what that is in, in terms of contract specifications. So I'm obligated to sell at 45, and it told me I got exercised. So that means I'm going to sell the stock at 45. Right? And then it tells me that the stock is 47 and a quarter. So that means I bought the stock at 47 and a quarter and I delivered the stock at 45. And I think that will work. I think that'll work because I got more money in than money out. Now, as I said, I do it on a per share basis. And then when I'm all done, I say, okay, how many shares are we talking about here? So now I say, okay, so I'm going to take my calculator and I'm going to take 49 minus 47 and a quarter. And it looks like 49 minus 47 and a quarter. It looks like it made $1.75 on how many shares?
On the
400 shares. It
400.
looks like we made $700. So the answer is choice A.
Ah,
Now, remember the way I got that $700 profit was we made $1.75 here in the green, right? Times the 400 shares. Right. So you remember where you struggled on this one?
yeah. I think I was so used to doing the like two separate positions that when it was just one position with, I just don't think I took my time to write everything
Okay.
out. Like,
Oh, yeah,
yeah.
I told you I'm a huge believer in options to take as much time as necessary to do what I call a setup.
Mm,
Setup. And the more time you take on it, should have time because you should be doing practice testing, knowing what it takes you to get through 125 performance opportunities. But yeah, the setup. And I told you, Christina, don't beat yourself up. It's either people get the hedges and not the speculative, or the speculative, not the hedges, because they're different. This would be a completely different thing if we were agreeing to, this was our tutoring session. If we were agreeing to sell stock we owned
right.
for 4 points. So remember, you can either agree to sell stock you own or stock you don't own. All right, that was a good one. Good one. Let's see. What was your next one?
So I've got another one over here.
And then Michelin will come back to you. I just don't want to have to shut down the Kaplan Q Bank and then go find it again.
So it would be number this this one was weird. Yeah. So the question is 1564195.
Okay. I like this one. I like this one. Which of the following does not expose a customer to unlimited risk? So I think you should know, or should know, I guess, this is Dean language. Don't be a dumb bear. There is no way that a dumb bull blows up. If you're bullish and you're wrong, you can lose a lot of money. It ain't going to be unlimited. Because if you're a bull and you're wrong, it goes to zero. Yeah, it just goes to zero. There's no such thing as a stock that goes to -5. All right. Worst case, I'm going to call you and say the stock is zero. Okay, well, let's look at this. Short two uncovered puts. Now, that has nothing to do with answering that. That just means you don't have cash equal to the aggregate exercise price. You haven't met a margin requirement. Who cares? You're not short the stock. So here I'm obliged to buy 200 shares. And I say, well, okay, well, I buy 200 shares, it goes to zero. That might be a lot of money, but it's definable.
Mhm.
I can tell you how bad A is. B, you sell stock you don't own. I say, Christina, Daniel Drew, legendary Wall Street speculator, said those that sell what isn't his'n must eventually buy it back or go to prison. If you sell stock you don't own, that definitely subjects you to unlimited risk. Now, Christina, in our tutoring session, we said, don't be a dumb bear. If this was a smart bear, he'd buy 2 calls. And then that way he wouldn't have unlimited risk, but he's not effectively hedged. In fact, he's got no hedge. He's got no protection.
Right.
So he's out there. So dumb bear. So far we got A as a dumb bull, B as a dumb bear. Selling 2 calls on stock you don't own, uncovered, naked. So you're going to have to deliver that stock at the strike price if you get exercised. And that means, Christina, you're going to have to go in the open market and buy the stock and deliver it at the strike. And you say, well, Dean, what might it be trading in the secondary market? I say, I don't know, Christina. There's a finite supply of stock, potential infinite demand.
You're right.
If you get that wrong, you're going to blow up unlimited loss potential. Right? If I come into your office and say, I want to lose so much money that you in advance can't tell me how much. And I say, well, there's not a lot of things that will do that. You know, shorting the puts doesn't do that. And then D,
Right.
we should recognize from our tutoring session, that's not an effective hedge. You don't need an obligation to buy back the stock. You need a choice to buy back the stock. I just want to turn this into another answer set here that I think you should be prepared for as well. And so I'm just going to take the liberty here of changing this. And what I could say here is short 200 shares and long 2 calls. And that would be the same answer still. It'd still be A, because that would be a short position that is indeed effectively hedged.
Mm-hmm.
All right, so same answer set. I like that one. You got one more?
Yeah, I do. I am still a bit confused on that one. I
Okay.
don't know so it says, which one of these does not expose a customer to
Yeah,
unlimited
short
risk?
input doesn't expose, right? If you go to your matrix, are you using a matrix?
Matrix?
Well, when tutor, we didn't go over this, but we have what's called the options matrix. It's a
Uh-huh.
quadrant with each of the option positions.
Ah.
Have I not shown that to you ever?
I have seen that. Yeah. I think
Okay.
I saw it on one of your videos.
Well, okay. Well, what I was going to say, Christina, is if we go to the short put, a short put does not have unlimited risk. We should
Mm.
know a short put exposes us to the risk of break even to 0. Let me just show that to you real quick. I'm going to stop the share here. Boom. And I'm going to share something else with you. And so now what I'm going to share with you.
Oh, it just clicked.
Yeah, well, that's all right. Let me show the matrix to you. So here is the matrix. I she's retired, but she's used to teach this stuff like Dean, and I call it the options matrix. She calls it the beauty chart. So shout out to you, Deirdre. Don't know what you're doing. She's a consultant making. She probably hasn't taught a class in 20 years. But anyways, I call it the matrix. She calls it the beauty chart, and here it is. Let me bring it up for you. Let me find you gals again. Sure. Can you see my screen?
Yes.
So when I said, do you have your matrix? What I wanted you to do is go to the quadrant for the short put. I suggest that people memorize this matrix. And I say, what can you tell me about a short put? You say, Dean, when you're short a put, you receive the premium, you're obligated to buy the stock at the strike price. Your max gain is the premium, and your max loss is break even to 0. That's definable.
Okay.
Right here, your max loss is so the only one of these 4 things that actually subjects you as a basic option position to unlimited risk is that not a short put, it's the short call or
Okay.
short the stock. Right. So that's why I was saying, do you have your matrix or there's a lot of different versions of that, right? What was that one? Was that our boom, boom, boom? Let me go back. There's our cubic. All right. What's our next one? We have another one, or is that it?
Yep, we've got another one. I think it would be, I don't know where these are. Here we go. Here we go. I want to do, okay, yeah, I'll do this one. So it is 1557759.
Okay. Last one for you. Which of the following are exempt from the registration requirements of 33? Micheline, this is good for you too. You know, a big part of this thing is about registration. So how do we register a security? 33 is known as the Prospectus or Paper Act. It's about when we sell brand new securities to the public, right? And anytime I hear variable contracts, I think in mutual fund with an insurance wrapper. A mutual fund with an insurance wrapper. The separate account is the mutual fund. And you certainly have to register mutual funds under 33. When Congress passed 33, they said your own government wouldn't rip you off. And so the US government is allowed to sell brand new securities to the public without making a registration statement. And the state said, well, if you don't have to, we don't have to. So very testable, muni bonds are exempt from registration requirements. Municipal issuers are what we call exempt issuers, and the only kind of security they can give birth to is an exempt security. By the way, Micheline, on your 65, 66, this is exactly the same test concept, except in your exam, it's more likely it says the provisions of the Uniform Securities Act. Right. So same thing. The Uniform Securities Act is the state version of this 33 about how do you register securities. Okay, so 2 is out because that's an exempt issuer. That's very testable. Mutual funds? No, no, no. Mutual funds, you're selling brand new securities to the public. You better make a registration statement. You better give them a prospectus. McLean, on your exam test question, mutual funds are federally covered securities. So that means the mutual fund will have to register with the SEC, but it doesn't have to register with the state because it's what we call a federally covered security. So 3, we're going to register. Commercial paper, the way I think of it for test purposes, is commercial paper isn't sold to retail investors. Commercial paper is sold to money market fund managers. It's a money market security. And who's supposed to protect a money market fund manager? Him or herself. You know, this is about protecting Joe Sixpacks, retail investors, not about protecting retail investors. So I think this is a good one. This is a good Series 7 question. It's a good 63, 65, 66 question. This idea about registration. So Christina, you're not going to get a lot of this on your 7, but when you move on to 65 or 66, my guess 66, you're going to get a lot of that. So it's 2 and 4. 2 and 4, right? Very testable. I like that question. All right, McLean, it's your turn. You got anything you want to ask about?
Yeah. I don't know. I keep going back between mutual funds or balance sheets. Which one do you want to talk about?
Well, I don't know. I mean, we did a whole class on balance sheets and the replay is available. Did you watch that?
No, I didn't see that one.
Okay, so make sure you put balance sheet in the channel search bar. All kinds of good things will come up. Mutual funds are more important than
Okay, let's
balance
do
sheet.
that.
Yeah, but way more important. So, you know, let me just bring up on all exams, mutual funds are very, very testable. And this is one of the most testable slides the dean has in his possession.
Wow.
In fact, every once in a while, I like to screenshot it and just, you know, spam it all over the place. And then when people accuse me of spamming, I say guilty as charged, but one man's spam is another man's steak. And I think this is, I don't think it's spam. I think it is steak. And hold on, I gotta find it here. Where is the damn thing at? The build up because we there we go. Boom. So on all of the exams, whoa, yeah, but why did you do that to me? What happened there? Try it again. Boom, boom, boom. 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 There we go. on all exams. On all exams, this is big time test fodder. Can you distinguish between open-end investment companies and closed-end investment companies? So an open-end company is continually offering new shares to the public. So that means not only are they going to have to comply with 33, they're also going to have to comply with, oh, I gave it away, the Investment Company Act of 1940, but also 33. So prospectus, right? They're going to redeem shares. So Christina says, Dean, how many shares am I going to get at redemption? I said, well, I don't know, Christina, because we're always doing business based on the next calculation of the NAV. So I don't know how many shares you're going to get. Very testable. The idea that we're always doing business with an open-end mutual fund based on the next calculation of the NAV is called very testable forward pricing.
How would it ask that in the question though? Like the next calculation of
Well,
the
they'll just
NAV?
say, that would just point blank say, a customer asks how many funds shares they're going to be able to purchase or how many money they're getting at redemption. You respond, you don't know till the next calculation of NAV what best describes this. And you would say,
Oh,
right. But by the
okay.
way, the other way they test on it is we don't have forward pricing for closed-end funds because they're not redeemable. They're not, you don't talk to the fund. By the way, if you're doing business directly with the fund, that means when you're doing business directly with the issuer, that's called the primary market. There is no secondary trading. They're priced by a formula, very testable, all exams. That formula is the NAV plus the sales charge equals the public offering price. So, mutual funds. I'm teaching a mutual fund class. I think it's Friday. I don't know if you guys registered for that. If not, just remind me. I'll comp it to you and let you guys join us. But that being said, I'll just make up a mutual fund that has an NAV of $9.15 and has a sales charge of 85 cents. And what is the public offering price? And we would say $10. That is the formula for determining the public offering price. Very testable. The maximum sales charge in a mutual fund is 8.5%.
8.5%.
That's very much a test question. Aim and shoot, point and click. Right. The X date, remember, is the first date on which the security no longer trades with the dividend. The X date is the first date on which, in this case, the fund no longer trades with the dividend attached. No longer trades with the dividend. And since this is not trading in the secondary market, the X date is set by the board of directors. When there's secondary trading, the X date is not set by the board of directors. The X date is a function of what we call the Uniform Practice Code, which standardizes practices within the securities industry. And so, there we think of that as it's declared record X payable, all set by the board of directors.
Do you have a question?
Yeah, hold on just a sec.
Mhm.
So one of the things that's on all exams is unethical behavior. And so I call you and I say, hey, if you buy the mutual fund today, you get the dividend. But if you wait till tomorrow, no dividend for you. You've heard of dividend capture programs, haven't you? You say, well, Dean, isn't it going down by the amount of the dividend? And so, isn't that just creating an unnecessary tax situation for me? But I talked to your supervisor. I said, well, gee, you're no fun. So selling dividends are what we call an artifice. Don't you love that word, McLean? You got to know more of these legal words on your exam because the state administrator, most of them are attorneys. So this is an artifice. And what I mean by that, it's unethical because I'm giving you a artificial sense of urgency that doesn't exist. Right. It's, kind of scary how many people try and rip off seniors, but I don't know if the car dealers have a code of conduct. We certainly do in our business, but mom called me from the dealership and they were telling my mom that if she didn't buy the car today, Friday, she would lose the financing offer. And she said, well, my son's out of town and he won't be back till Monday. And so anyways, when they put me on the phone, I, put him on speakerphone. I said, put him on speakerphone. I said, guys, good news for us. There are lots of dealers in Las Vegas. And when I come back Monday, I'm sure we're going to be able to find a dealer that will honor whatever it is you're telling my mom. I said, maybe it's true. Maybe the financing offer does expire today. Call me a cynic. I believe in human depravity and original sin, and that you're just using that to close my mom on this car. I said, oh, no, we can leave it open till Monday. Okay, well, that proves it was an artifice, right? It wasn't a really genuine kind of a thing. I mean, that wouldn't be an artifice if that were true. But, the artifice means we're using this to kind of close this transaction when it doesn't matter because it's going to go down by that amount. Now, as I said, I'm going to answer your question. Now I'm going to go down the right-hand side of this slide, which is all very testable. So, if you ask me, am I a good prospect for an open-end mutual fund? The answer is no. Because you say, Dean, do you have the time, temperament, expertise to be managing money? I say, yes, I do. Did it for many years. I don't need no fund manager. Now, I would admit that there are certain areas where I should make an asset allocation, where I don't have the time, temperament, expertise. That's the point of a mutual fund, is hiring a professional manager. And it's the easiest way for most retail investors to get professional management. I have a friend, Clarice, and I said she saved up for hers a lot of money, $4,000. She goes, Dean, what should I do with the $4,000? I go, do you have the time, temperament, expertise to be managing money? She says, no. I said, well, then, you should hire a professional money manager. She said, I can hire a professional money manager with as little as $4,000. I said, Clarice, there are men and women who sold their soul to manage as little as $500 for you. She goes, why do I see those commercials on CNBC where they say the minimum relationship's like $500,000? I go, yeah, those aren't mutual funds, right? Those people you see on TV, Clarice, don't have anything against poor people. They just don't like talking to them, but a mutual fund, will do business with anybody, right? So now I want to make an asset allocation to Mexico, perhaps. And one way I can do that is with the Mexico fund. It's a closed-end fund. So they did an IPO, initial public offering, and now it trades on the New York Stock Exchange under the ticker MXF. And a closed-end fund doesn't have to worry about meeting redemption requests. The Mexican market is very volatile. And we say to you, if you can't handle the volatility, we're not going to redeem your shares. You're going to have to sell them to someone else for more than you originally or less than you originally paid. The Mexico fund, testable distinction, can issue common stock, preferred stock and bonds. I didn't say an open-end fund can't own preferred stock and bonds. They can't issue them. Closed-end funds can, and they can take that money and do other things with it. The price, supply, and demand, that's the most testable thing, is right here. This is the most testable distinction between the two, is how are they sold. And then the ex-date is the same date. Oh, let me fix this. Ooh, God. The ex-date now is the same as the record in secondary trading. That's a recent change, and you should answer accordingly. So let me just fix that. Same deal, though. If I call you to buy the Mexico fund, ex-date again, first business day. And in secondary trading, the ex-date is the same as the record date. It's not set by the board of directors. It's a function of trading. And again, selling dividends would be a big no-no. Okay, what are questions do we have before we end this office hour?
I had another question about mutual funds.
Very testable. What's your question?
These look so confusing to me.
Is
This was a
in the
little more helpful, but what was that?
Is it in the Q Bank or just a question? Either one, doesn't matter.
Yeah, just a question.
Yeah.
Mutual funds. Oh, yes. I remember. So I was doing some practice questions, and I know a lot of them kept asking if you, something about the X date, and if you sell it, like does the fund, does the whole fund go down by the amount of the dividend?
Yeah, the NAV goes down, the NAV per share.
The NAV per share.
Yeah, that's right. Right, because that money is no longer in the fund. It's been distributed to shareholders. Same for stock, by the way. The
Okay.
stock should typically go down by the amount of the dividend, right? Because that is a distribution that is no longer in the fund. Primarily, what you want to keep in mind on mutual funds is what the biggest driver of NAV is: the portfolio of securities. That's what makes it goes up. What doesn't make it go up or down is additional contributions and redemptions, right? I guess if that's a wash because there's money coming in and money going out, that's not anything. All right, what else? Anything else?
I have a question on one of my last actual exams. It asked about a specific license for selling, and it kind of brought it into life insurance, but it also talked about being like a registered agent. So in my mind, I was thinking it was a variable life insurance
So
product.
let's just talk about that. So first major test point, we don't give concessions, discounts, or allowances to firms that aren't members of the FINRA. So you can't give a concession, discount, or allowance to what's called a non-member firm. You also can't give commissions to people that aren't registered as agents of the broker dealer. So Christina takes her thing. She passes her exam. She's an agent of the broker dealer. She has a 6 or a 7, and she has a life insurance license. And somebody at her office, old school traditional life insurance agent, comes to her and says, Christina, I have a client who wants a variable annuity, but I don't want to have to take that 6 or 7. Why don't I just put it on your rep number? And the commission's $8,000. I'll tell you what, I'll spiff you $2,000 for using your number to process the trade.
Oh.
Absolutely not. Right? We cannot give concessions, discounts, and allowances to non-members. So you'd have to be registered to be able to sell both securities and insurance. Second test point, you can't split commissions with people who are not associated with your firm without the permission of the state administrator, which is not likely, or the permission of your firm. So when we are splitting commissions, we have to be with the same. So if Christina can pass her exam, she's working with a team, that's fine. One other question. If we are working as a team at the broker dealer selling things, we're all appropriately registered. We do not need to disclose what our commission splits are amongst the team. We have to disclose commissions, but I don't have to say, hey, Christina's new, she only gets 20%, or, Christina's our top producer, she gets 80. That's not, that's not the client's business. We just have to disclose the total commission, not how we're splitting it up. But I had a guy, he's a race car driver, a retired race car driver, and he gives referrals to this guy. And he said, Dean, I'd really like to pay him. I mean, his referrals are fantastic. I will get him registered. And you can pay him. You get him paid, you got to get registered, right? I had a client of mine. He said, Dean, I know the commission that you just made on this transaction, your firm, is $24,000. I said, yeah, Russell, you're correct. I mean, 8% of $300,000 is $24,000. And he says, Dean, I could refer other people to you, like myself, and I could get part of that 24 grand. I said, that is a great idea. In fact, and I put a big pile of books on his desk there. And he goes, what are those? I go, well, that's your SIE study materials. That's your Series 7 study materials. And that's your 66 study materials. And if you get all 3 of those registrations, we're off to the races, man. I'll tell you what, Russell, I'll pay. It's my firm. So, payouts are my business. I said, Gamma Global, we'll pay you, Russell, 12,000 of the 24 after you get all your registrations. He goes, well, I don't want to do that. I said, well, I didn't think you did. So sorry. All I can say is thank you very much. We don't give money to people who aren't registered. Right. So very much a test question. All right. Well, that concludes our office hour for this evening. We're going to, this will be available as a replay. If you do any paid business with me, these office hours are available free. They're not tutoring. So somebody missed tonight and they said, I would like to reschedule my office hour. I go, no, that's not how these work. And again, they get moved around a little bit. And also, everybody owes thanks to Christina because she's been kind enough to give permission for her tutoring session, which was a good one to be posted on the channel. I'll probably put that up tonight too, because I think people will go, they watch this, Christina, they go, well, what's this guy talking about this video? I don't see it. So, and then remember, for you agreeing to do that, I owe you some tutoring time. So we'll figure out when to do that. All right. And then remember, ladies, I'll put you, if you're not in there, I'll put you in the mutual fund class on Friday.
Would
Mike,
love to, thank you.
for joining me this evening. And if I forget that, just, send me an email. I'll make it happen. Anything else before we call it a day?
You're the best, Dean.
Oh, well, thank you.
You are awesome.
I try. Thanks for being patient with me, particularly this week. I will also remember once we conclude office hours, be looking for the next one. So I try and keep it at least every, couple weeks. If we have the demand and there's people, out there, I'll do another one, but at least once every 2 weeks, we turn to office hours. Okay. If you're watching the replay, remember, inch by inch, your exams are cinch, yard by yard. Your exams are hard, and we'll see you for the next session. Keep coming to the Tuesdays. I know Tuesday, Micheline, I know you participate quite a bit. And Christina, make sure you stay plugged in as we go through this journey together. So I'll see you
Last Tuesday, you didn't do a drawing. Was there a reason for that?
I just, because I was having so many internet problems,
Oh.
I thought, why complicate my life? Where, I was holding it together. Good news, everything's back up and running today. It was audio and everything okay? Sound okay?
Yeah, it was fine.
But the first time I had problems out here, and isn't that how it goes, right? I thought, well, I don't have to worry about being off grid. I'll just do what I do when I'm in Vegas. And then all of a sudden, I have two things. I have a Starlink, and then I have this T-Mobile thing, and the T-Mobile went down. Okay, and I call 611, and they go, "We're aware of network problems in your area. You do not need to stay on the phone or leave us a message." I'm like, okay, well, is this going to be a day or 2 days? And then I fired up the Starlink last night. And I think you remember that guy was saying, well, you should go to Starlink. I go, I'm on Starlink right now. But the booster went down. So, I mean, oh God, so this morning when I woke up and everything was working, I go, oh, all right, let's keep it together. So, and that was the other reason, two reasons I moved it. One is I had a scheduling conflict with paid tutoring. And then the other reason was I thought, I don't know if my internet's going to work. Let's move it to Wednesday. Maybe it'll be a better day for internet. All right, ladies. I'll see you whenever I see you next.
Very nice.
Okay.
Thank you so
Bye-bye.
much.
My pleasure. Bye-bye.